Hello and welcome to the look ahead for Wednesday, the 26th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight we'll be getting inflation data out from Australia. In the European session, we'll be watching German GfK consumer confidence. In the US, the bank stress test will be in focus amid a quiet economic calendar and oil EIA inventories. So let's just start with the inflation reading from Australia, expected to tick higher to 3.8%, up from 3.6%. And the reading comes as RBA Governor Michelle Bullock disclosed that the RBA did actually discuss hiking interest rates at the last meeting. Now, that does mean that they are a particularly hawkish central bank compared to the other major central banks, but actually not that hawkish compared to the Federal Reserve. And if we just have a look, that's reflected in the range-bound trading pattern that we've seen between the Aussie dollar and the US dollar over the last couple of months. So if we do get a stronger than expected inflation read from Australia, then that could actually raise expectations that the central bank could hike interest rates as a next move, and that would give some lift to the Aussie US dollar. On the upside, be looking for a breakout of 0.67. The range on the downside is 0.66. So that's, it's trading pretty much mid-range as we speak. So they're going to be the breakout trades to watch out for. If we get weaker than expected inflation, then we could see Aussie dollar, US dollar coming under pressure. Just moving on, next one to be watching out for is going to be German GfK consumer confidence, expected to improve slightly to negative 18.9, up from negative 20.9. Does come after recent data from Germany, Eurozone's largest economy, has been a little bit on the weaker side. We had the IFO Business Climate Index earlier this week. Defied expectations and actually fell, suggesting there could be some slowing in momentum of the economic recovery. Also, PMI data from Germany at the end of last week was weaker than expected. So that will be in focus. This is the DAX that we're watching here. The DAX it's fallen sharply. It found support just around that 18,000 level. It's being guided higher by the 100 SMA. As I said, support on the downside there at around 18,000 on the 100 SMA. If you do get a break below 18,000, watch out for 17,800, which is the May low. If we get stronger than expected data and an upbeat market mood, although do just keep in mind we've also got the French elections at the end of this week, which is just sort of, also limiting the mood as far as Europe is concerned. But on the upside, look out for 18,400. That's the 50 SMA. Also the near-term high. And above there, 18,650, which is the April high on the upside to be watching out for. Now, I did mention that, US is relatively quiet as far as data is concerned. We do have the bank's stress test, which is basically expected to show that US banks have ample capital to weather any renewed turmoil in the sector. However, we're also expecting the banks to be relatively conservative as far as investor payouts are concerned. Now, what to be watching here, levels to be watching are on the upside. On the downside, we're actually just testing at the moment that 39,000. If we get a break below that level, then watch out for the 38,800. That's the 100 SMA. On the downside below there, then watch for 38,500, the static resistance. We can see it's a fairly strong bearish candle that we're looking at the moment. So it does look like it could have the momentum to break below that support level. So just watch out for that on the downside. On the upside, there isn't too much in the way of resistance. If we can get a rise above the back above sort of and stay above that 39,000, and basically on the upside, watch out for a renewed push towards that 40,000 key level. So I do hope that you like what you've seen, and if you do, then please do give this video a like, and for more videos like it, please do follow.